Hey guys, the second day of the new trading week starts with Bitcoin trying to recover at least a bit and trying to test the level of 88,000. The structure of the move still remains bearish, and we have to look for optimal positive scenarios for long trades. That is what we are going to break down today. On the weekly Bitcoin chart, a Fibonacci grid is stretched over the last major corrective move from the all-time high. The price has come into the marked imbalance area around $80,700. We can see that essentially all imbalances on the higher time frame were covered by this corrective move, and right now there are simply no similar imbalances all the way down to 50,000. That is why I can suggest that there is simply nowhere and no real reason to go lower, but we should not forget that this is a market and it is capable of surprising us. Nevertheless, I still remain positive about the further future of Bitcoin, at least locally. As the price was falling toward the 80,000 level, it was also forming several key imbalances. But now they have value for long traders, and the trading situation becomes a mirror image of what we saw earlier. Now the zone of imbalance for Bitcoin is above the current price, and short sellers should start to worry, because Bitcoin has successfully closed the imbalances below, while the ones above represent the greatest interest. 98,000, 100, and 3,000, these are all levels at which, once reached, the total amount of short liquidations will approach $15 billion. If you want to short in this kind of context, then good luck. Maybe you want to use Bitcoin reaching these levels as a point to open short positions. In that case, good luck with that as well. The fear and greed index is at 22, which by itself is paradoxical, considering that even though the price is in a correction, Bitcoin is still trading above 80,000, which is expensive by any measure. Of course, the defining factor is who owns the asset and at what prices they bought it. Big Money was buying Bitcoin at an average cost of 77,000, which is very close to its current price. On the 1st of December, the net inflow into spot BTC ETFs amounted to $8 million, and yes, that is less than what we are used to, but the positive dynamic is still there, and that is good. After the substantial outflows that were happening non-stop, these inflows look like the first positive signs of a new impulsive rally beginning to form. Over the last 24 hours, long traders were liquidated for $358 million, while short traders were liquidated for only $118 million. For the last few months, this has been a real holiday for those who opened their short positions in time. How long this trend of predominantly long liquidation will continue is unclear, but one thing is absolutely clear. If you want to open a short, the price will go up, and if you open a long, it will go down. The closest levels with clusters of stop losses are located above 87,000. As I said earlier, billions of dollars are concentrated in the area from $87,000 to $95,000. And if we're talking about the market maker being interested in any specific zone, all of these levels are higher. Given how easily Bitcoin can fall and how manipulative it is, I will consider the bullish scenario through a short squeeze setup, namely through one more false downward move, possibly with an update of the low at $80,700, and only then a rise to activate liquidations around the 95,000 level. On a daily time frame, after forming a pocket of uptrend liquidity from April to October, we see that Bitcoin has formed exactly the same kind of liquidity pocket, but now in a downtrend. Bitcoin has been systematically updating its lows, and now the last low has been set at $80,700, which I view as a potential manipulation level and a trap for short sellers, because below there are neither nearby imbalances, nor levels with large liquidity clusters. That is why this trading setup is the most preferable one for me, and this is the level of risk I am willing to take. The take profit targets in this case will be very ambitious, and the marked nearby highs at 93,000 and 96,000 are more like a zone for the first take profit or an area to move to break even than a final area for full profit taking. If this scenario starts to play out, I will watch closely to see whether any reversal patterns appear in the 80,000 area. The stop loss will save us all.